Hi friends, welcome to our today's deliberations on Indian capital market. You must have noticed that in spite of having 21 multiple times of earning, Indian capital market is still considered as overweight. You are aware of the fact that Indian capital market is a key component of the country's financial ecosystem and plays a pivotal role in channeling funds from savers to businesses and government entities. Capital market normally consists of two segments. One is primary market, another is secondary market. We all know that primary market stocks and bonds are issued for the first time, whereas in the secondary market, the already issued securities are bought and sold among investors. Now, question could be, what are the price multiples in respect of other emerging economies vis-a-vis India's positions? Now, I will try to give you some idea. India has 21 times on estimated current earnings. That means P multiple of India today is around 21 times. If you compare India with South Korea, it is 14.75 times. China, 11.3 times. Malaysia, 14.55 times. And Taiwan, 80.1 times. These are the factual statistics for your understanding. Accordingly, you find that India's P ratio is considerably higher than other emerging economies. Friends, despite concerns about high valuations, given the sound macro fundamentals and the fact that it is the fastest growing economy in the world with a potential of earning growth, most emerging funds, including their managers, are now overweight on India. Question could be, what are the basic reasons for such an overweight perception about India? What are the basic reasons? We have identified 8 strong reasons which support India's overweight position. First point, because of strong macroeconomic fundamentals. India has exhibited robust macroeconomic fundamentals, including consistent GDP growth, low inflation, and prudent fiscal policies. I'll give you some examples and give you the latest statistics about India's macro fundamentals. GDP annual growth rate is expected during 23-24 about 7.8%. Inflation rate, latest position 6.83%. Interest rate 6.5%. Cash reserve ratio 4.5%. Business confidence index, we have a point of 132. Manufacturing PMI, very important, above 50 is considered is comfortable, and India's position is 58.6. And services PMI, it is around 60.1. If you consider these important macroeconomic fundamentals, you will find that India is enjoying a great confidence of the overseas fund managers. Now, I would like to refer one more important point about macro fundamentals, that is Fitch's forecast. You must be knowing that Fitch is one of the most respected international rating agencies in the world. Now, Fitch forecast GDP growth for 23-24 is at 6.3%. 6.3%. India's economy grew at 7.8% in the April to June 23 quarter. Fitch also forecast India's economy to grow at 6.5% in the financial year 24-25. That means Fitch has forecasted two figures for 23-24, 6.3, and 24-25, 6.5. Fitch also expects during 2023 end, retail inflation will come down to 5.5%. So we have seen the real macroeconomic fundamentals both of the government and also of the international rating agencies report. These are major reasons for which India is considered as overweight. Now, apart from that, we have identified 7 other factors that is adding value to the India's capital market. Now, let us discuss what are the other 7 factors that are adding huge value to the Indian capital market and its perception. Number 1, demographic advantage. India boasts a young and growing population which translates into a potentially expanding consumer base and labor force. This demographic dividend can derive economic growth and corporate earnings with the combinations of several other factors, that is large and young populations. 65% of our population, they have an average age below 35 years. This group has huge potential towards consumptions. And you know, consumption increase means directly helping the GDP to grow. What are the other demographic advantages? Growing middle class, rapid urbanization, diverse labor force, global workforce. Today our people are working both in the country and also they are working in various other developed countries. Market potential is very high in view of the large populations and large consumption base. These are the basic advantages which are expected by any country, and these advantages are demographic advantages. We call demographic dividend. All countries do not enjoy these facilities. India is enjoying the facility because a significant portion of our population is below 35 years of age. Now, this is number one reason, demographic advantages. What are the other factors? Reforms and ease of doing business. You must be knowing that India is continuously taking various ways to improve the ease of doing business. GST is one of the basic reasons. Another area is insolvency laws, through which the resolution plan are adopted by the banks in respect of non-performing assets. There are many reformative actions have been taken by the government in the last 15 years to improve the ease of doing business. Foreign direct investment has started coming in a great way, duly supported by FPI, that is foreign portfolio investments. And you know, if the FPI increases, market will automatically grow. Next is the global comparisons. When you compare Indian entity with emerging markets, considering India's economic stability, high foreign exchange reserve, which is close to around $600 billion, and the potential growth, all investors, including the foreign investors, have a very high expectations from Indian market. Another significant reason is for digitizations and technological advancements. The digital revolution in India has opened up new avenues for business and investors. Fintech innovations have improved access to financial services, insurance, and trading platforms. Today, mostly all banking transactions you can cover through fintech. Even you can take the loans without going to any bank or any institutions. Next is the sectoral opportunities with PLI scheme. Government has introduced PLI scheme, special incentive scheme, to encourage manufacturing of certain products which were previously not manufactured in India. Almost all companies have started coming to India and setting their shops, manufacturing plant, including Apple, Microsoft, you name any company, they are having their shops in India. And PLI scheme has really encouraged both Indian as well as multinational companies to set up their manufacturing unit, to service not only the domestic industry or domestic market, but some of the companies have set up the company in India as their export hub. That is, we previously heard that the China, Taiwan are basically famous for setting up the manufacturing hub to service world market. So is the case in India. Most of the multinational companies have started or in the process of setting up their plant in India to service the international market. And there, Government of India's PLI scheme is playing a very, very significant role to encourage manufacturing activities. Now, these are the basic reasons that are responsible for having such a high market value or considering India as overweight even today when P multiple is around 21. It is important to note that while some investors may consider the Indian capital market as overweight due to the factors which I have explained, others may have a more cautious outlook, considering factors like high valuations, it is a fact, and geopolitical risk. Therefore, investment decisions should be based on individual risk tolerance and long-term financial goals. I hope this video will be helpful to have a holistic picture about the India's economic position, economic fundamentals, market capitalizations. Today, India's market cap is around 325 lakh crores Indian rupee. That is 325 trillion Indian rupee, which is almost equal to India's GDP. So friends, hope this video will be helpful to understand the whole gimmick and whole concept of the capital market and its positions today. And thank you for your patient hearing. As usual, I'll always request you to send your remarks, to your comment, also to subscribe it and also forward it to your friends and known people so that more and more people are aware about the latest positions of the India's capital market.